Hi friends, how are you? Vladimir here with you, and this is the weekly review for the last week of April 2012, 23 of April. Previous week was an interesting week where we saw opposite as from regular last period situation when the indices went down mainly and the majors holds a very tight range. And several weeks ago I discussed about it was exactly the opposite when the majors went down and the indices went up, and we discussed that it's about to be this gap that opened between this the majors and the indices will be closed because naturally they are traded together all against the US dollar, and they all represent the market situation and condition mainly, not always. And once a big gap is open, a big difference between their moves is open, it should be closed, and that's what happened during the last week. How it's going to affect on the current week? Well, the situation is very sensitive, and every day something could be broken in this glass built situation, as Europe is in a big real problem. Yes, there are meetings of G20 during the weekend, and yes, they all offered to bring more money and etc. But still, the situation is too sensitive. The countries look like having big issues and taking more and more into depth, and we remember from the past, right, from the last 3 years, how the market reacted for any of these situations. At the beginning it could be like optimistic, but then bam, the face on the leaders and the countries are going down. The VIX index, which is the fear index, right, is going up strongly. And remember, it's much easier to get into panic instead of build the confidence, right? Every day, every small thing that is not going like they all promised, and the market and the traders tend to be in immediate panic. And this panic normally, that's why the down move normally happens much faster than the up move. And that's exactly what might happen this time. So there are several opportunities we might enjoy this week, and I'm going to share it with you. The main thing are crosses. The two majors, euro dollar and pound dollar, against the Pacifics. They're looking very interesting. Take a look on the pound New Zealand, for example. It did break above the 200 moving average on the daily chart, but there is a divergence. Is this a final divergence? I am not sure at all. I will explain why. Because there was a flag on the daily chart that was broken up, and if it's broken up, it might go higher for duplication of this move, which means we can go and see the pair trying to reach 199 or maybe even 2 before making any significant retrace. Going to the weekly chart, what can we see on the weekly chart? The resistance is trying to be broken. MACD changed the slope to very bullish, and RSI is breaking 50. It's a bullish sign. But let's go for the short terms. On the short terms, we can look that there was a clear divergence built here, right? So a down move expected somewhere to around this area. This support here was not really tested, as we can see, right? This one that was broken was not really tested, and this area is around the 20 moving average. This support can be also a range, like from here to here. It could be a range of this visit. A stop of the down move might happen here, and the pair might easily then create for us a beautiful hidden divergence for the market to continue up. Now, for intraday opportunities, for the short opportunities, the short term, you can look to buy around this range, right? If you have intraday bullish divergences, like on 1 hour chart, like on 15-minute chart. But for longer, sell we should look for the pair to go higher to around the 199 to maybe even a little bit higher. This is also a range to look for the pair to rebuild its divergence, RSI maybe to go more extreme, and then we can have very beautiful sell opportunity for like 4, 5, 600 of pips, maybe even. So definitely that is a pair I would like to recommend on. Also buy opportunities on the short term, the look for the hidden divergence on the 4 hour with bullish divergences continuing or regular on the shorter time frames like 1 hour or 15, and then if it does go higher, look for these areas to around 199 and higher. Look for to complete the divergence with candle patterns here, and then bam, the attack the sell. It could be extremely interesting situation, and many pips possibility of profit. The same with the pound Australian. From one side there is beautiful, extremely beautiful divergence. From other side, the stochastic, yet too strong, and the divergence line that we have had on the pound OZ with the RSI is just broken. If the pair will go back below this resistance that was broken again, we can say, aha, it was a false break. Most likely the pair is going down, and strong down. But it could be a trap here. It could be a trap. The pair can take the move little bit higher, even like 100, 150 pips more, or even more for the next important resistance around 158, as you can see, a little bit higher even, to create the divergence there, to complete the divergence there, to rebuild itself, and then crush. So pound Australian as well, my recommendations are, if the pair close below this 150, 155, 154, 90 even, if it close daily chart again below, we can say, aha, it was a false break, and then go and sell that, at least for back to the 200 moving average target. But if it does go higher, look for the above the 156.50 area for your attack, the next attack, and then around the 158, 58.30 area. These are the areas to look for the divergence to rebuild itself and then attack for much longer. If we take a look on the weekly chart, here we can see bullish attempts as well. We can see RSI did cross the 50, MACD is bullish. The only thing that might make the stop we talked about is weekly stochastic oversold. It still does not guarantee it. It's about to go down strongly from here. It still has room to go. That's why I say we have to be careful, watch these areas, watch what's happening, look for the combination of the daily divergence before we jump any sell. As for now, it is bullish yet. Another interesting pair to watch is the Euro Pound. Euro Pound on the weekly chart is trying to create a bullish situation. No bullish candles patterns yet, but we are already almost on the, well, not almost there, on the support range, higher than 080, going all the way to around the 081. It's a clear support area. The daily chart also hints on some divergence. I don't think it's final yet. From my opinion, the pair should make or up and then strong down to around the 081 or below, like this, or a down directly after these two dodges down to make this divergence more continuing. And then I think the Euro Pound will be a great pair to look for the attack to go all the way back, at least to the weekly 20 MA. But I do believe it will be also a change for the direction, and the pair to go back to around 085 or 086 at least. Also beautiful pair to watch. Now several words about the yen pairs, mainly on the crosses against the yens. Pound yen, from one side, as we can see, bullish engulfing, everything looks good, but the stochastic still very strong down. I do believe the pair can go a little bit higher. Going back for the daily chart, what should we watch? We should watch for possible bend to bend move, and if it happens, we have this extreme important resistance around the 134.50, 135, right? To look for somewhere here, bend to bend move, and then another crash. But also we can see that 4-hour chart has an extreme area already. It can block that, and to join from a down move from here, I would look for a break about below this level again. It's around 130.40. That's the importance of that. Now, what about the majors? By the way, about the yen, pound yen, and euro yen, most likely the most interesting pairs. Euro yen also can go a little bit higher. We have 108 something to watch, 108.50, something like that here, to make a beautiful retrace down. And it might be, but for the euro yen, a head and shoulders. Beautiful head and shoulders. We should watch for the euro yen for a possible stop, or from here, the 20 MA of the daily chart, or a little bit higher on the 108.50, or even a little bit higher to complete this head and shoulders, and then all the way down. Now, majors. I would not deal with the majors in this period. More than that, I think it could be the time to look for sale soon. Euro dollar is a pair I will not deal with. It's on a clear range. From my point of view, it's not clever to deal with that. That's why I'm out of that. Pound dollar is an interesting one to watch, as the pound dollar should go and make possible stop around the 160-150, the high of Fridays. But I think the pound has more room to go, at least for a daily Bollinger Band duplication. That's my opinion. I think pound dollar has more to go. We can see that the RSI line also was broken. I would stay bullish with the pound if it does go above 160-150. If it breaks again below the 160, then it could be the final way to crash. But as for now, I think pound dollar will be bullish. Yes, of course, the short-term divergences will cause fights. We can see the 4-hour charts divergence in extreme. It can cause fights. It can cause some intraday corrections, right, like this to the range. Definitely. But for longer run, I think pound dollar has more to go and should go higher. Pound dollar look strong. So watch for sell opportunities on the short term with the resistances. Sell for 40, 50, 60, 70 pips, depends what the 4-hour, 1-hour allows to its 20 MA. And for longer, look for any down move. You can look for buy opportunities for the pound dollar. Buy opportunities as long as it keeps above the 160. It should make the move. It should make the move. Aussie dollar, sorry, that's not the one. Aussie dollar and the New Zealandian dollar. Well, Aussie dollar, from my point of view, as long as it holds the 104.50, 104.60 area, I would not go and buy the Aussie. Only if it will successfully place itself above it, we can discuss about the up move. Until then, I will not be surprised if the Australian will even make the down move to complete for us a beautiful daily bullish divergence here, and then change direction all the way up again. New Zealandian dollar, same story. It's on the range yet, and that's why I don't think we should do anything with that. Interesting opportunities, of course, the indices, we discussed about that. I don't think that the market is about to change its direction completely, but I do believe indices has more to go. From my point of view, for long run, the Nasdaq should test this line. It could return up from here for another high and then make the strong move, or it could go as low as to the 20 MA of the weekly chart, right, to create some hidden divergence there, and only then make the up move. Anyway, I'm still bearish for the indices. from my point of view, breaking below the 2650 will open the doors for Nasdaq to go to 2580, 90 area at least. And for S&P, as I discussed, it might be head and shoulders, and that's why a strong break below this 1350 to 1340 even should open the doors for strong down move for the S&P. Nasdaq, same story. It might be head and shoulders going below 66 area, 660 sorry area, 12700 area, going below that, build itself below that, and we open the doors all the way for 12200 or even below. Another last opportunity is on the natural gas, friends. Pay attention how extreme the natural gas is on the monthly chart, on the weekly chart, and on the daily chart. From my point of view, the natural gas soon should make a bump up. Based on the divergence rule, I think that it should go to the 2.35, 2.40 level again. Based on the divergence rules, we have had a daily Marubozu and now kind of Harami building inside, you see. So it could be a beautiful buy opportunity. If it go lower, from my point of view, it will be just to provide us better buy opportunity. These divergences are extremely extreme, and a bump up is about to happen. The only question from my point of view is when. And that's the opportunities I would go with for the upcoming week. Thank you very much for watching this video, friends. I wish you a beautiful week, good profits, and enjoy the trades. Yours, Vladimir.